Everyone is saying Bitcoin just entered a bear market. And yes, it's true. Bitcoin broke below the 200-day moving average, the most important macro indicator in all of Bitcoin's history. Every time this has happened in previous cycles, Bitcoin entered a long bear phase. And every single time, that break was followed by a dead cat bounce, a temporary rally that fails right around the 200-day moving average before the real pain begins. If we follow that historical pattern, Bitcoin should bounce back to around $100,000, get rejected, and then fall into a proper multi-month bear market. At least, that's what history says. But this time, something is different, very different. If we zoom out and compare Bitcoin as price to what actually drives its long-term valuation, I'm talking about M2 money supply, global liquidity, and the price of gold, this cycle doesn't look like a market top at all. Yes, Bitcoin hit $124,000. But in real terms, in gold terms, it was not expensive. At the peak, one Bitcoin was only about 31 ounces of gold. In the 2021 bull market, Bitcoin hit 38 ounces of gold. This means that at $124,000, Bitcoin was actually cheaper relative to gold than it was at $68,000 back in 2021. This is the opposite of a mania top. And what about M2? Every previous Bitcoin peak coincided with the end of a massive expansion of the global money supply. This time, M2 exploded higher, but Bitcoin barely priced in that liquidity. It didn't catch up. It didn't overshoot. It didn't behave like a completed cycle. So the big question is, how can Bitcoin be entering a bear market if it hasn't even finished a proper bull market in real terms? Now let's talk about something that will sound controversial, but it's not a conspiracy. It's documented history. For decades, gold and silver markets have been manipulated by major banks. This isn't speculation. This is public record. We've seen bank traders convicted for spoofing, massive paper gold markets with no physical backing, and the LBMA and COMEX operating on fractional reserves. The Bank for International Settlements even admitted to using gold swaps to manage prices. If gold and silver were allowed to trade freely, many analysts believe silver would be $300 to $500, and gold would be $20,000 to $50,000. The paper market has suppressed the physical price for decades. And here's the scary part. Bitcoin has now entered that same system. For the first time ever, Bitcoin is held by the same institutions that suppress precious metals through ETFs, synthetic exposure, and financial derivatives. ETFs allow people to buy Bitcoin without requiring actual Bitcoin, just like gold ETFs allow people to own gold without ever touching a single ounce. This creates synthetic supply, artificial selling pressure, price suppression at strategic moments, and a way for large institutions to control volatility. It's exactly what has happened to gold and silver for over 20 years. So yes, Bitcoin can now be manipulated in the short term. But here's the difference. Bitcoin cannot be manipulated forever. Gold is opaque. Silver is opaque. No one knows what's really in the vaults. But Bitcoin? It's transparent, finite, and auditable. Remove coins from exchanges, and the suppression ends instantly. That's why Bitcoin always breaks manipulation attempts in the long run. So what does all this mean? It means the recent drop below the 200-day moving average might not be the beginning of a new bear market, but a fake signal generated by a highly leveraged market and potentially by ETF-based suppression. Meanwhile, gold is breaking out. Silver is breaking out. A potential scandal is brewing with the LBMA and COMEX. Money supply is expanding, global debt is exploding, and central banks are accumulating real hard assets. And Bitcoin remains undervalued relative to gold, liquidity, and its own historical ratios. When paper markets collapse, when the real price of gold and silver finally breaks free trust in legacy financial institutions evaporates, And what asset benefits the most when people no longer trust paper claims, custodians, and banks? Bitcoin. If gold and silver break out to their real fair values, Bitcoin doesn't go down. Bitcoin goes parabolic. Because Bitcoin is the hardest form of money in a system where everything else can be manipulated, inflated, or corrupted. This is why this cycle may not be ending. It may be resetting, preparing for the second phase, the real phase, the one that's driven not by leverage, but by fundamentals. So yes, Bitcoin broke the 200-day moving average. And maybe we will get that dead cat bounce. But looking at M2, gold, silver, liquidity, and the structure of this market, this doesn't look like a completed cycle. It looks like the beginning of something much bigger. The financial system is changing. Paper markets are cracking. Gold and silver are waking up. And Bitcoin is positioning itself to be the asset of the next era. If you want to see the full charts and ratios that support this analysis, hit like, subscribe, and let me know in the comments. Thanks for watching.